Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. Here are the headlines. Markets are off the record high levels after scaling them in opening trade. Metals and auto stocks are keeping the gains in check. Stocks like Torrent Pharma and Just Dial have seen a surge in open interest. Torrent Pharma sees fresh short positions. Tata Motors is the top loser on the Nifty after its fourth quarter earnings disappointed yet again. And Tech Mahindra will be reporting its fourth quarter numbers today. The stock is trading little changed.
All right, those are the top headlines for you at this hour. Let's also tell you what's happening this Tuesday morning. Well, Nifty scaled to its fresh highs in today's session, currently trading with gains of nearly 40 points, inching very closer to that mark of 11,900. The premium, as you can see on the futures side, has been shrinking. So right now, the spot Nifty and the difference between the futures is just about 3 to 4 points. Bank Nifty, however, which was an outperformer, in fact, in yesterday's trade, which did see substantial gains coming by, 8% higher when it comes to the open interest. Remember, there were a lot more long positions seen in Bank Nifty futures yesterday compared to Nifty futures. Overall, the market breadth, I believe, this morning is even Steven. Yesterday's rally was a broad-based rally where you saw the benchmarks as well as the broader market indices moving higher. But this morning, I guess, the broader market indices have come under a little bit of pressure. Let's just pull up the mid-cap as well as the small-cap index. Last when I checked, they were just about, actually right now they're trading pretty much flat, but they had slipped into the red territory. On the option side, how is the positioning looking like? Very surprisingly, after a rally of 400 points yesterday, one would have expected more put writing in the system, but the PCR was just about the same. So there was some bit of activity on the put side, but compared to the 400 points rally which we saw, it was nothing compared to that. So positioning wise, 12,000 call is the level I'm sure market participants would be watching out for. That's the strike where maximum open interest on the call side is, and the base after yesterday's rally has moved higher. So maximum open interest on the put side is now at the 11,500 strike. And specifically in today's trading session on the call side, we've seen interest coming by for strikes like 11,900, which has seen addition of 1.5 lakh shares, and the 12,000 call strike has seen open interest addition of 1.5 lakh shares. On the put side, the most active, I believe, right now will be the 11,800 and the 11,700 strikes, where open interest addition has been seen between 1 to 1.5 lakh shares. Agam, yesterday, bulls were comforted by the correction that we saw in India volatility index. It collapsed nearly 16%.
Right.
But what's the road ahead? I think we'll have to wait and watch till May 23rd. In today's session, VIX is up about 2.5%.
That's right. Well, the VIX has taken off, but this is after looking at a decline of around over 15% yesterday. But let's take a look at all the stocks which are seeing a surge in open interest today, and there are quite a few actually. So we have Torrent Pharma, but on the losing end, and 32% increase in OI. Just Dial, on the other hand, is advancing in trade, as is the case for Bank of Baroda as well. Flattish moves for DCB Bank, but BPCL again looking at declines of nearly 3.8%, but that is largely on account of earnings. Torrent Pharma is something we're going to watch out for. Suzlon Energy looking at unwinding, as the case for Reliance Capital, and of course IGL will be the other stock which will be in focus, but not too much to speak for. We're looking at some gains in the benchmarks, and again, it will be largely stock specific in today's day of trade.
That's right. And a lot of reactions which have come in for individual stock on back of earnings. So particularly 3 stocks that we would want to take view from our experts. One of them is Torrent Pharma, which Agam already highlighted. CLSA has cut the target price to 1,800 from 2,100, though they've maintained the outperform rating. Short positions have been seen on this counter today. Tata Motors is the other one which has reacted to its earnings. It's taking some support at its 100-day moving average. CLSA has maintained sell rating. UBS has maintained its neutral rating on the stock. And lastly, Bharat Forge is the other one, which is taking some support at its 100-day moving average. The stock was up yesterday, but this morning it's come under pressure. CLSA has maintained sell. UBS also has a sell rating on this one.
Okay. Well, on that note, let's get in our experts for the day. But before we do that, here's a reminder. If you have any queries regarding futures and options, you can call us on 022454044141, or, of course, write to us on Twitter, Facebook with the AskBQ hashtag. Our channel on YouTube is also available to you. Let's welcome in our experts of the day then. We have Nirav Chheda of Nirmal Bank Securities and Amit Shah, Bobcap Markets, joining us on the show. Good morning to both of you. Amit, thanks for joining in. 11,900 almost. Where do we go from here?
Well, we had a good start yesterday, almost around 165 odd points we saw on a gap up start, and from almost 11,600 onwards, the market again inched towards the all-time high level, gaining over 250 odd points from those levels after the gap up start. So I believe even during 2014 pre-election election outcome, during the exit poll, we had seen a gap up start where at that point of time the level was close to around 7,000 odd.
Yeah.
And till this date, that gap is not yet filled. We hope that this gap again remains intact and it's not yet filled. Ideally, this gap is considered to be a continuation pattern and can see some kind of a follow-up momentum if not filled within 3 to 4 days time frame.
Right.
So I believe looking at this and the development what Navneet mentioned on the put option side, where the open interest has moved higher from 11,000 to 11,500 odd strike, there can be a good supportive action of 11,500 to 11,600 odd. Yes, considering the current trend, market is inching closer towards 12,000 odd mark. We need to see how those call writers are behaving at those levels once it inches closer. I believe the more it sustains above 11,850, 11,800 odd mark, it will build more strength and can see some call unwinding happening at those strike levels. However, if you look at the open interest on the Nifty side, we started the series close to 2 lakh crore odd shares, so that has still remained there. We saw some kind of an unwinding on the long side which happened during the early start of the May series, but still the open interest base is hovering around 2 crore odd shares, so that's not yet built in for the coming series. So we need to keep a close watch on how the Nifty open interest is panning out from here on. I believe the more it sustains above 11,800 odd, the more conviction the street will anticipate holding about 12,000 odd mark ahead of the expiry.
That's a very pertinent point, Amit. You had made this earlier also, that open interest not moving much is indicating lack of participation ahead of a crucial event. Let's see, we'll wait for the verdict on May 23rd, but as of now, markets are enthused with the exit poll verdict, so to say. Nirav, let me come to you. Amit doesn't have any strategy on the index, and since yesterday we've been asking a lot of technical analysts who've been coming on our shows, and they're saying avoid any trade on the index. What are you doing this morning?
Yeah, part of the problem really is, the premiums. If you see the at the money call and put for Nifty, there is a 400-point premium on the weekly expiry. So becomes very difficult to give a trade based on, the premium. Now we have an election outcome coming on the 23rd. Again, we've just broken out above a very important level of 11,830. Still, this breakout has to have a confirmation, and this confirmation will only come on a weekly closing basis if, Nifty closes above 11,830 odd levels, on Friday. Now, before that, we have that election outcome. So, becomes very difficult to give a proper trade till then. It is better to stay sideways than, trade at this moment. As you said, the VIX will again play a part. It had come down yesterday, but till the election outcome is out, it might again rise, and you might see, the volatility the market was seeing come back in the next 2 days, today and tomorrow. So it is better to not trade on the index. However, one point to note is the bank Nifty is also broken out above its all-time highs. So the two factors for index, both the indices are positive. We just need a confirmation by Friday, and then we should be sorted out, for the next 6 odd months, where we might see, a rally extending up towards 12,500, 13,000 odd levels.
Okay, fair enough. So that's the view coming in from our experts, and as everyone has been mentioning, it is a little tough to take call on the markets right now, given the kind of volatility after the exit polls. We saw a decline in the VIX, a substantial decline in the VIX, and again, it's on the move right now. It's on the rise right now. That said, let's talk about stocks then. And Amit, I'll come back to you on stocks. What are you looking at right now?
So I'm looking at Shree Cement. Overall, as had mentioned, that overall the cement space in this series looks like can outperform the overall other sectoral indices, and we saw a good performance in Shree Cement as well as in Ultratech Cement. The open interest traction during the rollovers were quite impressive, and so is seen in the last 3 to 4 days time. Since the base were around 97 odd thousand shares, the base has moved to 1,30,000 odd shares. So that shows that the long addition has been quite intact in this space, and it has given a fresh breakout about 20,500 odd and has been sustaining quite strongly with good volume participation. So I believe the more it sustains here, and on the downside 20,200, 20,300 will act as a support zone. The possibility of moving towards 21,500 to 21,800 would be quite on the higher side.
Right.
My another buy recommendation is on Axis Bank. The stock has seen some kind of a breather from 780 to 720 odd zone, and from there we saw within 4 days the stock picking up and almost touching its all-time high levels and hovering around 786 odd band. So I believe the stock has a good potential from here on, both on the short term as well as on the positional front. On the downside, it holds very good support around 773, 770 odd levels, and on the upside, I believe in short run can see 820 to 825 levels.
Okay, 2 long calls coming in from Amit, Shree Cement and Axis Bank. Nirav, what about you in terms of individual stock futures? What are the bets?
Yeah, I do have both long calls. The first one is a buy call on Cadilla Healthcare. It is one stock which is very beaten down. I was looking for beaten down stocks to give a buy on. Looks like, Cadilla, after a fall of 100 points, most of the indicators are in the oversold zone, and there is some amount of short covering coming in the pharma sector as a whole. Even Cadilla has seen good support around the 245 odd level. So I believe it can come up towards the 275 odd level, so one can buy the futures here with a stop loss of 245 and a possible target of 265, 275. The second one is a buy call on ICICI Bank. Just like Axis Bank, ICICI Bank has also broken out above its very important resistance area. Both these banks have continued to see incremental open interest built up, and they haven't been really affected by the index coming down or up. They've consistently moved ahead. So I believe ICICI Bank can actually move up again to 430, 450, which is the new high levels. I believe one can keep a stop loss of 395 for your longs and buy the futures here.
Okay, so 4 long calls, and at least 2 of them are from the banking space. And of course, those are the stocks which are actually driving much of the gains so far. This has been the case. But let's move on and talk about a handful of stocks that we want to address. And I'm going to take up Torrent Pharma. CLSA has cut Torrent Pharma's target to around 1,800. It is currently at around 1,600. So, it's still above its target price, but there seems to be there's some challenges that Torrent Pharma has to face. Now, it's down by as much as 3.6%. There has been a surge in OI as much as 33% for its May futures, which expired on the 30th of May. And once again, there certainly is some challenge with respect to profitability. Again, if we can take a look at how it's done on the charts, perhaps pictured against the daily moving averages, and there you have it. It's taken a turn for the worst. Today it's down 9.8%, and currently not too much to speak for, except for the fact that it's just weakened further. Amit, what do you do with Torrent Pharma now? How are you going to trade this one?
See, overall, structurally on a long-term scale, it is still a retracement of its primary uptrend.
Yeah.
On considering today's low, which is close to 1528 odd, it has taken the support from the November 18, October 18 odd lows, which was close to around 1520 odd, and it has showed some kind of a buying momentum from there on. So I believe that would be a key level to watch out for. If it violates 1520 odd levels, which is close to today's low, then definitely there can be a follow-up selling pressure in the stock, which can drag the counter further towards 1400 odd mark. Right. But unless that is not seen, and if it before doing that, if it manages to cross above 1660 or 1680 odd levels, then I feel the time and the price correction would be done for the short term, and from there on it can see some kind of an encouragement on the buying side. So at this point of time, I would be more on a wait and watch side, where I would monitor 1680 on the upside and 1520 on the lower side.
Okay.
Okay, that's Torrent Pharma. The counter is down nearly 4% in today's session. Before we move on to Tata Motors and Bharat Forge, I just want to pull up the intraday chart of United Breweries. That counter has recovered. Remember, it had a gap down opening, operationally weak quarter, gross margins were down, but the stock has actually recovered. There is some buying which has emerged at the lower levels which were seen in the morning session. 3.5% higher, and I just want to alert our viewers, yesterday there was a lot of open interest build-up seen. At least open interest was up nearly 40% in United Breweries in yesterday's trade. Nirav, if I could come to you, considering the recovery that we've seen from the opening levels, 3.5% higher in today's session. Yesterday, OI build-up was quite significant. Would you recommend taking any trade here?
Not really. UBL is trading in a range, the upward range is around 1455, lower end around 1300 odd level. So it is continuing to trade in this range in the last 2-3 months. I believe till it breaks out above the 1455 levels, which is an important resistance on the upside, it will not see, that buying coming in, that aggressive buying coming in into the counter. Having said that, I'll be waiting and watching if there is, again selling pressure coming in around the 1450 odd levels, it can be a good short candidate on the upside.
Just want to weigh in a little further when it comes to United Breweries. The earnings have come. The reason why I began the day with a little bit of a red was because there was a substantially, considerably operationally weak quarter. Its revenues were largely in line, but that was also a miss. But that was perhaps on account of the weakness that we've seen in West Bengal after we've seen a sharp rise in the duty there. That said, we are seeing considerable declines in operational margins. Against expectations of 15%, margins came in at around 10%, and that's diluted the entire financial year. We're still awaiting more clarity from the management, but these are the numbers as they stand. Because of that, we've seen a decline of around 20-25%. Now, let's come down to the matter of your valuations too in United Breweries. At 55 times, FY20 earnings, this is again, it remains continues to remain much higher than its previous 5-year price to earnings, and it continues to remain a considerably overbought stock, at least again fundamentally speaking. And again, just a final word on the analyst recommendations. We still have 6 out of 11 analysts who are either a hold or a sell on this stock. So more than half the analysts on this particular one do not expect a significant upside, and the return potential on the Bloomberg consensus is only 3%. The real question is, where do we go from here, and what is it that's actually driving United Breweries even higher? That's a question, of course, as Nirav has already mentioned, on a technical basis, he wouldn't want to buy into the stock. A lot of fundamental analysts would also question the valuation at which United Breweries is currently trading at. It's currently at 1,424, and it's been a little bit of a surprise. But from there, we move on to Tata Motors. And this is the other one which was in focus, again on account of earnings, is down 4%. It has disappointed the street yet again. That may not be too much of a surprise though. Its open interest has risen by as much as 9.3%. And just a few weeks ago, it had actually managed to scale levels of around 200 for some positivity. But that seems to have been short-lived. So there is weakness back again. And well, on a 3-month basis, it may have moved up as much as 7.4%, but certainly has come off 23% in 1 month. Amit, would you buy into Tata Motors, or would you want to stay? And in that case, would you even initiate short positions at these levels?
See, I would definitely not buy at these levels. Purely being the stock has been consistent in a downtrend, making a lower top, lower bottom formation since the time Feb 16 onwards from 600 odd levels. So there has been a multiple resistances now which the counter is going to witness. These kind of structures always gives hope that okay, now at this level it is a value buy, etc, etc. Right. So even at 250 people were quite gung-ho about on this kind of stocks. So I believe always this kind of a structure disappoints on every rise. you may see good kind of a pullback during good times, but almost those pullbacks are not that sustainable because you face those resistances on every upside. So to me, it is still in a not in a good shape. On the upside, it has reversed sharply from 250 odd levels and back to below the 200 mark. On the downside, it now has a key support at 167. If it violates 167, then definitely there can be a next leg of downside where on the it can test towards 142 to 137 odd levels in the lower side. On the upside, till the time it is not crossing 240 to 250, every upside from there can be short-lived. So I would be staying away from either on the long or on the short side.
Okay, that's Tata Motors for you, almost giving up its yesterday's gain, reacting to its numbers today. Remember, GLR margins were slightly better than what the street was estimating at about 9.8%. But let's move on and quickly talk about Bharat Forge before we start taking individual queries which have come in from our viewers. The stocks failed to take support at 100 DMA. It's down 3%. Remember, yesterday it was up. The earnings came by. Brokerages are not too enthused. CLSA has maintained their sell rating on the stock, and they have a target price of nearly 420, which is below the current price of 470, and UBS has also got a sell rating on this one with a target price of almost 480. Nirav, Bharat Forge, yesterday the stock was up. We've seen some bit of correction coming by in today's trade, 7% higher when it comes to the open interest today, indicating there are some shorts being built up. Would you take any bet here on Bharat Forge at the current levels?
Yeah. See, it had broken down below its 50-day moving average around the 500 odd levels. It retested it yesterday and then fell again today. I believe Bharat Forge can be shorted at this level. It is making a negative pattern. It is making a lower top, lower bottom formation as well. I believe it can retest its bottom of around 445 odd. So one can sell at current levels with a stop loss of around 490 or 500, whatever suits you. But below 445, it can come down further up to 380 odd levels. That is quite far away, but as of now 445 should be the first target, and one should be booking profits around those levels.
Okay, well, on that note, let's very quickly move in on to our queries. And the first one is actually on the Bank Nifty. We have Venkat Sai, who's bought the 29,000 Bank Nifty put. And this is, of course, the May expiry, and I'm assuming this is the 30th May expiry. Venkat, please correct me if I'm wrong, because that's where I'm going to, put in the query for. 29,000 put in the Bank Nifty. Can we pull up what premiums it's currently trading at and see? Okay, currently at 280. Of course, the underlying's at around 30,732. I'm not certain as to what the possibility is of the Bank Nifty correcting from here on. But Amit, what would you do with this?
There will be three indicators within the option side which will be against them. One is the delta, one is the IV, and the other is the time value. We have an expiry lined up next week.
Correct.
I hope this is a monthly contract.
So I'm assuming this is the monthly contract.
So 29,000, which is almost 1,700 far from the current market price. So definitely there is not much skin in the game. However, we anticipate that the IVs can be cooled off once the event is done.
Right.
So definitely that will eat more of the premium, considering which is far out of the money strike price. So I believe all the three parameters, which is the time value as well as the delta and the volatility, is not going to play out for this strike. Right. I would recommend to get out of the strike at this point of time. Rather, I will still stick to my view that stay away till the time event is neutralized on either direction. You never know, considering the current structure. The trend looks very much positive, where on the downside it has a very good support around 30,400. So unless that is not violated, I believe any short trade or buying a put option will not be advisable at this point of time, and especially with the three parameters on the option side, which is not in your favor.
Which also means, Venkat, that you should avoid selling the 29,000 put too for now because of the extremely volatile times.
Okay, let's move on and take the next query, which is coming from Tamil Selvam. He's bought one lot of 11,500 call strike, and this is for the monthly expiry at 477. I think the current premium of that is somewhere about 480 right now. And then he sold the 11,800 call at 222. The current premium of that is just about the same, I guess somewhere about 220. He wants to know when to exit this position safely with some bit of profits that he can book. Nirav, I'm going to come to you. What would put your advice be to our viewer. It's the monthly contract. He's bought the 11,500 call at 477 and sold the 11,800 call strike at 222.
Yeah. See, again, I would have said one can book if index goes towards the 12,000 odd levels. But, we are at election announcement week. Very difficult to judge. I will suggest, he knows what his profits are, he knows what his maximum loss is. So as well hold on till the expiry. If the election result comes in favor, Nifty can go up towards the 12,000, 12,200 odd levels. That is when, the premiums will shrink as well and his profits will be seen because of the intrinsic value. And that is when, one should be booking profits.
Okay, perhaps a time to take a final question, but also a very important one, especially in times of today and under the circumstances. We have another question from Tamil, and he wants an explanation on implied volatility in options and why they seem to surge every now and then. Amit, I'll take this one with you.
Okay, so in the options, there are 6 factors which are determining the price, right? So. Yeah. You have the price, you have the strike price, you have the time value, you have what is the interest rate and the volatility. So volatility is something which is not known. Rest all the 6 parameters are known to you.
Right.
So based on what is the current price of that particular option of a particular strike price, if the prices are higher, that means the IVs are very much demanding on the higher side.
Correct.
So implied volatility is nothing but based on the price at which for the strike price the option is trading at, whether the volatility is expected on the higher side or on the lower side, right. It determines that. So just to give a simple example, if it is a higher IV, that means definitely if it is a higher price compared to the strike price what it is trading at, that means the IV is demanding a higher premium for right. that particular strike price. Right. If the price comes slightly rationalized, then that will boost the IVs to come on the lower side.
Okay.
So that is a direct phenomenon to the price based right. on the bid and the ask price of the option of a particular strike.
Correct.
The difference in those you determine and how the IVs is going to play out. So that's the most of the time what we've seen is whenever the IVs goes up, all the option premiums are always on the expensive side. So slightly on a thumb rule side, at the money contracts normally trade close to 2.5% of the strike price. The premium cost is somewhere around that.
Right.
But when you see the IVs moving up, you see that the at the money strike call or put option, you are paying premium close to 4.5% odd.
Sure.
So that's where the IV is playing the major role. So that's where the volatility is getting into those strike price and making this premiums more expensive.
Okay. All right.
Okay, that was a great explanation by Amit. Thanks for that, Amit. Just want to address one stock before we wrap this show. And by the way, the broader markets are now trading in the red, so watch out for that. Pull up Interglobe Aviation. The stock bounced back in today's session. It's up almost 2.5 to 3% in trade. Nirav, very quickly, is there any trade do you see on Interglobe Aviation? The stock was in focus a few days back because of the news of some dispute between the two co-founders, but today it's trading above the mark of 1,500.
Yeah, looking at the stock, I feel, there is some distribution going on because there has been tremendous volume at the upside, near the 1,600, 1,550 odd levels. That means someone is exiting, some smart player is exiting. That is why I believe one should be booking all profits if you bought at lower levels and, looking to short the stock at current levels with a stop loss of 1,550. It is likely to come down towards the 1,400, 1,350 odd levels.
Okay, guys, we've run completely out of time, so I'm going to take a moment to thank both our experts, Amit and Nirav, for joining us and taking us through their views and solving a whole host of your queries. For more updates on the F&O space, you can check our website out, bloombergquint.com.
Well, with that, it's a wrap on this edition of the F&O Show, but stay tuned to Bloomberg Quint Live for more news and updates.